Hi, everyone, and thank you for joining us for our February New York City real estate market update. As always, I'm here with Bill Krooss-Tadas, our team's director of sales, and we're going to go into a little bit about what we're seeing in the market over the last month. Bill, I think a continuing story from last month is the fact that inventory rate levels are still relatively low compared to previous years.
Yeah.
Right? And on top of that, we're seeing fewer listings on the market right now.
Yeah,
Correct?
at least in the month of February.
Yeah.
So what we looked at for the first 12, now 13 days in February are how many new listings have hit the market. Less than 500 of which have hit in the month of February compared to over 1,500 in the month of February last year.
Mm-hmm.
Also, inventory is actually 11% lower in active listings right now compared to last year. And the most important part of that is last year's inventory levels were 10 to 20%, depending on what you consider the normal, off of inventory levels that have been our normal, for the last decade, outside of, say, COVID.
Right. Now, there's a bunch of reasons probably
Sure.
underlying that, but maybe you can highlight a couple of the ones that you think are currently driving the market.
So one, obviously, that we've been paying a lot of attention to is the median listing price.
Mm-hmm.
The median listing price is 7% lower than it was just last year. And last year, the median listing price was a few percentage points lower than it was in 2022. So sales prices and what sellers are asking and what people are transacting at is lower than expected. And that's where everybody had to go to kind of meet the market and get deals done.
Mm-hmm.
That's the one that I've been focused on, but I've also been speaking to colleagues in our office and other professionals in New York City, and they're all saying the same things as well. Well, people are locked into interest rates that are lower, if they purchased in 2017, 18, 19, and 20, which means they may be ready for that second apartment.
Right.
And perhaps they're also getting record high rents for their apartment. Rather than selling it, they were planning to, but they decided, wow, I can get so much in rent right now, it might be worth it to hold on to it and wait for a better market.
Sure.
So there's a lot of factors, and we're looking at them all.
And one of the other ones that we had talked about earlier that I think actually is really important is in the past, a lot of people left New York, right, when they were ready to have families, when they were
Sure.
ready this, and they went to places that generally had lower price points.
Yeah.
Right now, I mean, I'm hearing from some of our colleagues and referral partners in New Jersey and Connecticut that they're still, the prices went up so much over the last few years that there just isn't really a great trade-off between the two markets.
So, there's like 4 or 5 markets right around us, right? Obviously New Jersey, Bergen County, Hoboken, Jersey City, etc., but also Connecticut, upstate New York, Westchester, and Long Island.
Yep.
And these markets since 2020 have gone up anywhere between 25 and 75%. So, if the alternative was selling your apartment and then buying a much larger space in the past, and now it's sell your apartment and buy a moderately larger space because that's all the proceeds can afford you, maybe it's not as attractive as it once was.
That makes a lot of sense. There is one segment of the market that we actually talked about on our team meeting, and I'm throwing this one out at you right now, that I think would be interesting because what we call a move up market, right? They are likely going to get less for the apartment that they're selling.
Right.
But if they're looking for a bigger apartment, they're going to get that at a lower price as well.
Yeah, I mean, trading up, right? When families are growing, when people get married and they're going to live together in the same space, these are the people that have an opportunity right now because, sure, they probably expected more for the apartment that they own that they'll be selling. They'll be selling their 1 bedrooms, their studios, their small 2 bedrooms, and they'll be trading for $600 to $1.2 million.
Mm-hmm.
So maybe they're losing 7 to 10% off of their expectation, maybe more. But if they can gain 7 to 10% expected value on a larger purchase, well, then they've actually just made themselves some money born of an opportunity of a low inventory market where if they find the right property and they find something that they actually like, we believe they're very much ahead of the game.
It's really interesting. The other factor that we were talking about earlier that seems to be, I don't know, coming into play, but in a very unusual way, right, is the fact that normally we consider the spring sales season for real estate to be March through June, right?
Yeah.
We saw it pop a lot earlier last month. January was probably the strongest January we've ever had.
Yes.
We're not, and then the weather changed.
Yeah.
Right? The last couple of weeks, the weather changed. And we've definitely seen, in terms of the number of open houses, the number of offers that we're doing, right, that it has dropped back off from the highs of earlier January. However, could very well be that we're still heading into a March start of this official season. What do you think could happen?
So, I mean, this specific week, we've noticed less offers than the week prior. But this is the first week that we've even noticed the drop off. We talked about it during our team meeting, but it's still relatively, it's still relatively robust, especially for February. And although we were seeing 2 or 3 deals happening almost every single week in January and even at the end of December, believe it or not, that's not that far off where we even expect to be for the next couple of weeks on average. March is really going to come down to inventory levels. That's what we're paying attention to. And I mean, the hard truth is that if less inventory is coming on the market right now, and all of the apartments that are the most desirable are continuously being gobbled up, well, then buyers are going to want to start to hold back a little bit and wait for something that's more ideal, something that has more of what they want, because there's not as many options as there usually would be.
Well, hey, I mean, sounds like there's some interesting things going on in the market, and we'll see how it plays out a little bit over the next few months. One thing that I think so far hasn't changed, is because we talked about this last month, is that, look, 2024 seems to have possibly been the bottom of the market, right?
We think
2025 is going to be a bounce back, but it might not be the big ol' firecrackers and fireworks sort of thing. But 2026 still has that possibility.
Sure. We don't really know when the next, really big run will be. We haven't really seen one since right after COVID, and that was short-lived. And prior to that, we hadn't seen it since right after the financial crisis from, say, 2012 to 2014. But we do expect something along those lines at some point in the near future, because of some of those, the counter to those, some of those really, really slow times between 2023 and COVID.
Right.
So there will be a bounce back this year. I think we can see most of the perceived losses gained back, but I don't think that will change headlines like it will if one day prices start to quote unquote soar.
Right.
As they're getting closer to the surrounding areas, and perhaps that means there's more opportunity in central Manhattan than there has been in quite some time.
Look, at the end of the day, I think a lot of what we're saying is there's always a cycle in real estate. There's always going to be a boom and a bust. And we haven't had a boom in a while.
Yeah.
Okay, we've had a couple of busts.
Yeah.
So there's a good chance that we will see one. We just don't know when it will be.
Yeah, I mean, definitely going to happen again. We just have to see
how
when.
quickly it will be. All right. Well, thank you everyone for joining us. We're thrilled that you were able to spend a few minutes with us. And if you have any questions or need anything, please feel free to reach out to us. Our contact information will be on the next slide. Thanks so much. Have a great day.